Hi, I'm Courtney. I'm from Financial Immigration. I'm an expatriate tax consultant. And joining me today is Delano, legal manager of our cross-border taxation department. And we'll be running through the Tax Residency article, Back to Basics. Delano, I don't know if you just want to run through the beginning stages of financial immigration.
Sure, thank you very much for the kind introduction. I really hope that this is a fruitful discussion, very valuable to those expats abroad, which the article is certainly relevant to them if they are planning to financially immigrate from South Africa. And what does it mean for them in the context of tax, and more so their relationship with the tax man, in this case SARS.
Thank you for that, Delano. So based off of the article, what did you find most interesting out of the context placed in the article?
Well, I think the most interesting point is the significance of ceasing tax residency in relation to it being also a financial decision and not merely a tax decision. What do I mean by that? Well, there's a significant opportunity for expatriates abroad who wish to financially immigrate to save on a tax bill by protecting foreign-sourced income. And that's in relation to them updating their status with SARS from a resident to a non-resident. The timing, however, of when an expatriate decides to pull the trigger in submitting an application to SARS and classifying themselves as a non-resident, there are financial considerations. One example is whether an expat has sufficient cash flow in consideration of an exit tax that may be applicable. These are the type of conversations which expats certainly are having, should be having, and the article serves as a reminder as to why this is such an important decision to make.
And just based off of the article, I understand there are a few misconceptions regarding financial immigration and ceasing tax residency. Do you want to run through the difference between financial immigration and what the difference is between ceasing your tax residency status in South Africa and the impact of that?
Sure, it's a very important question. The current laws we have around South African tax residency is robust and has a rich history, not only in case law and what the courts have decided, but also in terms of SARS's interpretation behind the residency tests in South Africa. And more recently, there has been a shift in terms of the old regime of financial immigration where SARS and SARB were involved to a new dispensation and seizing tax residency squarely with SARS's verification on whether the request to update the status from a resident to a non-resident has well-founded merits based on a residency assessment. Residency in and of itself is a very universal concept in the domain of tax, and rightfully so, South Africa has strong laws in order to assist the revenue authority in collecting tax that is due to them, including tax on income sourced outside of South Africa. But what makes this more topical is that a lot of expats who have new job opportunities abroad are not willing to bear the burden of double tax. And one way in which they can alleviate that burden on a legal basis and protect their foreign-sourced income so that they can use that money for different financial opportunities is to consider seizing their tax residency status in South Africa.
Thank you, Delano. And I understand that there are 2 tests that SARS considers. Can you take us through those tests and what the requirements are?
Certainly, and it feeds into your previous question around misconceptions. South Africa has legislation which regulates tax residency, and in particular, it's the Income Tax Act. Not to make this an academic conversation, in short, SARS has the so-called Ordinarily Resident Test, and in a nutshell, that is where does the taxpayer regard their permanent or real home to be. The second test is the so-called physical presence test. And this is the one that usually attracts a lot of misconceptions because the nature of special rules around tax often has a day's test component to it. What is really important as a starting point is the sequence in which SARS applies these tests to determine if an expat is still regarded as a resident in South Africa for tax purposes. The Ordinarily Resident Test is the first test, and it really looks at a whole host of factors and really the mode of life of a taxpayer. Typically, an individual who financially immigrates from South Africa is really the type of person who is loosening their ties with South Africa, both personal and economic, and hoping to establish that in a new tax home, which would be the destination from which they depart South Africa. That in mind, once that individual has gone abroad and has set up a new tax home, they might formalize the status update with SARS to a non-resident through financial immigration, but they certainly should be wary that SARS can still rely on the second test, the physical presence test, to monitor the days in which the taxpayer or expat still returns to South Africa on occasion over a number of tax years, typically 6. And if they've spent sufficient time in South Africa, notwithstanding that their new tax home is abroad, it might be that SARS can classify them as being tax resident once again and therefore entitled to tax worldwide income.
Thank you for the clarification there on the 2 tests. Taking into consideration what we've just spoken about regarding the misconceptions and the 2 tests that SARS considers. Further along in the article, it explains the Notice of Non-Residency Certification letter. There is a misconception with the old financial immigration regime and the new one. And the old the new misconception is that that taxpayers don't need to obtain a notice of non-residency certification if they underwent the old regime. Can you take us through a little bit of the comparison in the old regime in comparison to the new one and now the new requirements in order to proceed with financially immigrating?
It's a very difficult question to navigate in a short discussion. But certainly, the benchmark for one being officially registered with SARS as a non-resident in South Africa for tax purposes is the now Notice of Non-Resident Tax Status Confirmation letter. Where an expatriate does not hold this letter, which is to be issued by SARS after verification, one would be incorrect to assume that SARS views them as a non-resident. This really underpins misconceptions such as getting on a plane and leaving South Africa therefore implies that the Revenue Authority is aware of the taxpayer's intention of going abroad, and for the taxpayer to be classified as a non-resident simply by virtue of leaving South Africa. What is critical under the new regime is that even for applications or requests for this non-resident letter, which can be backdated, SARS must be informed. The one saying that really rings true in this conversation from a legal perspective is that an individual cannot take law into their own hands. And more so in the context of expatriate tax, a taxpayer cannot resort to a self-assessment. They must give SARS the opportunity to verify that position. The upshot being, has the taxpayer informed SARS that they are now abroad and or have been abroad for a period of time and wish to have a confirmation letter that they are indeed non-resident, whether it be in a current tax year or a tax year that has long passed, maybe 2008, 2009. These are the dynamics of really engaging with a professional on tax planning and making sure that your cessation date is well aligned with the two tests which SARS recognizes, and that there's been no risk of re-triggering residency, specifically under the physical presence test, if they've been abroad for longer than 6 years.
And taking into account obtaining the notice of non-residency certification letter, how would an expat abroad take their money outside of South Africa? How would you go about transferring the funds from South Africa abroad in conjunction with now the financial immigration process?
There is an element of a tax question as well as a banking question. And this is more pertinent for those also seeking to take advantage of the two-pot retirement system regime that's currently in place and the golden opportunity of an early withdrawal. You need to ensure that your bank account held with an authorized dealer in South Africa aligns with your status, or more specifically, tax status with SARS. In other words, if you've obtained your confirmation letter that you're a non-resident and still wish to transfer funds out of South Africa, when making that request to your authorized dealer, it is necessary that expats ensure that the authorized dealer's bank account is converted from a resident account to a non-resident account. And that then means your status with a revenue authority also aligns with financial institutions, and that there is a correct status of this individual who has not abandoned South Africa. They have simply aligned their statuses with those authorities who need to be informed, and that their banking activity of transferring funds out of South Africa simply aligns with that status update.
So aligning your banking status with South Africa through the financial immigration process, how would that affect one's option in cashing their retirement vehicles? And are there any repercussions to in cashing your retirement vehicle?
So when it comes to retirement funds, one is always wary that these type of funds should only be used for emergencies. So it is not encouraged that taxpayers make use of their retirement funds in order to carry the very heavy and significant cost of living at the moment. But when it comes to expatriates abroad, it certainly is a golden opportunity for them to consider updating their status with SARS to non-resident, informing their authorized dealer or local bank in South Africa that they wish to convert their account from a resident to a non-resident, and then dealing with your policy administrator that should you take advantage of an early withdrawal, please can we ensure that the transfer of funds is aligned with the account from which they will be transferred, and the account from which it will be transferred aligns with their tax compliance status and non-resident status with SARS.
Thank you, Delano, for the very insightful session on the article as well as the financial immigration process. If one were to get in touch, how would they get in touch with you to get further feedback or advice on this topic?
So a great opportunity for all listeners to really engage and read our article. More so, they can find us on our website, financialimmigration.co.za. And they can also visit our offices at 17 Eaton Avenue in Bryanston, as we really encourage our clients to visit us and see where we can best assist them with the financial immigration process.